Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC TV 18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. Wednesday morning, middle of the week. Markets have had a good run. After 6 days of falling, the markets for the last 4 days have been getting a bit of a lift. Can it continue is the question. There's lots of news developments from a regulatory angle, which we will have to track as we kick off, especially with regards to online real money gaming. It's a big blow to the sector, but it's coming up a little later. Global cues as well should be in focus. I'm Prashant. With me, my colleagues Surbhi and Nigel. Guys, good morning.
Hi, good morning, folks. Yeah, indeed, that was a big one, right? And the bill moves in Parliament today.
Yeah.
And for a lot of companies, a lot of private equity players that have put big money behind real money gaming, I think this is going to be an interesting one.
It's a blow.
Well, that's right. And it's a big day here at CNBC TV 18 because it's Prashant's birthday. So no debates today with regard to who's paying for the...
That's part of the that's part of the wishes.
Must be, not my phone. Must be Prashant's wishes.
Very happy birthday to you. Good luck, prosperity, and health
above all.
It's been great working with you.
Absolutely.
And wishing you a
fabulous year ahead.
Fantastic evening and a rocking year ahead.
Excel or aage.
Superb.
Thanks, guys. Thank you very much. Well, let's just, as always, take it from the top, right, in terms of what you need to know with regards to trading setup, right? So U.S. equity markets were lower, softer, but look at the difference. The S&P was down only about 0.6%. The Nasdaq was down 1.4%. Actually, it was large cap technology, the Magnificent Seven, so to speak, which is the reason why the market took a bit of a dip. Nvidia, for example, was down about 3.5%. I mean, actually, if you look at an index of the large cap, the top 7 names, the mega cap technology names in the US, and you made an index of it, and there are indices available, I mean, that index was down some 3.5-4% itself, which means that some of the stocks were down more. And this is the question many are asking. Are we at the cusp of a bit of a phase of underperformance pullback for large cap or mega cap tech in the US, the Apple, the Nvidias, the Teslas, etc. of the world. There's no big single driver, and we'll talk more about this through the course of the show, but it looks like this is a pullback in momentum that we are seeing, a loss in momentum, a pullback in momentum that we are seeing. We'll need to keep an eye out on this, because if there is one part of the market landscape around the globe which has been leading the charge, it is large cap technology in the US. And if that hits the air pocket, I think it'll be important. All right, a bunch of other things. Trump urged, again, Ukraine, Russia. Trump urged Putin and Zelensky to show and he called it flexibility to resolve the conflict. Markets are hoping that Ukraine, Russia, both leaders come face-to-face for the first time in the next 2 weeks or so. But these are largely reports and reportage around, of course, what may happen. We don't know for sure. Oil was down about 1% at the back of hopes that something may happen with regards to, at least a meeting may happen with regards to Russia, Ukraine. S&P affirmed U.S. credit rating to AA+. And of course, I mean, S&P talked about how Trump tariffs will bring in all these tax revenues. It will offset any other weakness and the fiscal problems, etc. The 10-year on the back of that, largely, that was the dominant driver. The 10-year, the yield was down 3 basis points to about 4.3%. Nothing large, but just to mention. The U.S. Treasury Secretary Scott Bessent said interviews for Fed Chair Powell's replacements are set to take place around the 1st of September. So something to keep an eye out on there. And of course, as I said, just to circle and tie in the levels, the markets here in India have been gaining for 4 straight sessions. And there have been 2 big factors which are responsible. One, of course, is thawing of relations with China. And the second is potential GST cuts. And both are important and both continue to be the underpinning for the last 3-day rally, at least, that we've seen. Now, the levels, yesterday was a decent session for the market. Broader markets more as compared to the Nifty. Mid-cap and small-cap indices ended 1% higher. Levels don't change very much. If they're averages, they've moved a little bit after yesterday's sort of session. So the resistance is unchanged, 61.8% retracement, which we put out yesterday morning as well. That is 25,160. And that's the Lakshman Rekha in that sense, between turning slightly bullish, flipping into the bullish territory, or wondering whether there is more here on the downside. Support stands for the Nifty at the 20-day moving average, which is 24,747, and 24,673, which is the lower end of the gap. The same levels we put out. The average has changed a little bit, that's all. Bank Nifty is at the 20-day moving average, which is 55,860. We closed pretty much there. And here, resistance at the 40-day exponential, which is 55,935. And then the 50% retracement of the entire fall, which is 56,267. And Bank Nifty support comes in at the gap area between where we shut Thursday and open Monday, which is 55,472 and 55,647. I think it's slightly sideways. That's at least what the GIFT Nifty implied open is suggesting. 65 points lower start on the GIFT Nifty. Nigel, F&O, what are the stats telling us?
Well, that's right. The buy on dips thesis is going to be tested today because the last couple of trading sessions have been quite good. In terms of cash market flows, well, institutions, if you look at it as a group together, well, they were net buyers in yesterday's trading session, obviously led by the DI buying that we saw. There was a bit of a short covering bounce that did play out yesterday, both in the Nifty as well as in the Nifty Bank. And the larger number of shorts were piled up in the Nifty Bank. So that's why we did see that out there, those shorts are getting a little bit jittery because after a while, they're not getting follow through on the downside. As I said earlier, this market needs to stop falling. Then, in fact, gradually you'll see those shorts, they scamp of cover. And I think bulk of that short covering is still ahead. It's not behind because we haven't seen big short covering in terms of the FI positioning. Even as of now, they're close to 90% of their positions are on the short side. On stock futures, though, there was some covering that we saw. Could be a bit of an arbitrage as well out there. But on stock futures, the FIs, there was some covering of shorts and there was some long addition as well. The PCR, a few sessions ago, it had gone down to around 0.7. That's bounced up back to around 1.1. Because the put writers, they believe they're back into the game. They believe that those lower levels can get protected. And in fact, gradually that base for the market that we were talking about, 24,000, 24,300, that's gradually been moving up. So two most active strikes come up for you on the upside. The 25,000 call continues to see a mix of activity. There is some writing that we're seeing at that level as well. On the downside, though, the 24,900 put, massive open interest built up. The premium at the start of this week was close to around 280 rupees. That's come down to around 40 rupees. So for those put writers, they are holding on to their ground, and in fact, they continue writing and eating into the premium, which brings us to the levels. Last two trading sessions, we bounced off these lows of around 24,850. So that's the first support. Otherwise, the important mark to hold out is this 20-day MA. Until this 24,700, 24,750 level does hold out, you'll have to fancy your chances that this market wants to move up. Resistance, though, comes in at these levels, going by the options data, going by the recent high as well. 25,050, 25,100 is the important mark. The Nifty Bank, there is some covering that we're seeing out there, but it's unable to take out the higher levels. In yesterday's trading session, it ended close around the 20-day MA, the 50-day MA as well as there. So this is the congestion zone that we're looking at. The Nifty Bank needs to get its act together. Three big stocks I'm looking at. One is Vedanta. That is that NCLT hearing with regard to the demerger. The stock has seen a good rally in the last few sessions, so that's going to be an important trigger. The next one I'm looking at is PG Electro Plus. As I alerted yesterday, the stock has come out of the F&O ban. It trades at around 38 times in terms of forward earnings. That's FY27. FY26 will be a washout. But that's the stock I'll track because the shorts had piled into the system, and now it comes out of the F&O ban. And Astral, one of those big underperformers in the last 1 year. If you pull up a chart, you'll see the stock has corrected from 2,000 all the way to around this 1,350 odd mark. But we have been seeing delivery-based buying out there. It faces resistance at around the 20 DMA, which is 100 rupees away from here. And in a market where promoters are taking money off the table, the promoter there bought close to around 2 lakh shares. So that's the third stock that I'll be keeping on the radar. As I said earlier, it's going to be a test for the buy on dips with regard to the bulls. Back to you.
Okay, let's get to it then. The equity call of the morning coming in from Pratik Parekh of Nuvama, who says easing liquidity conditions and consumption stimulus are welcome. He says slowing profits amid high valuations cap the upside for the market. He says they are maintaining a defensive bias with a large underweight on cyclicals. They prefer consumption over capex and are overweight on consumer, private banks, insurance, telecom, pharma and cement. Meanwhile, being underweight on industrials, IT, auto and power. So that's Nuvama. Let's get to a call from Jefferies now. This one's coming in from Mahesh Nadurkar, who says Jefferies' economic indicator for July 2025 shows activity levels moderating to a 10-month low of 5.2%. He says consumption data from autos, card spends, travel has all softened. He adds that rural economy is doing better with higher crop sown and 2-year high currency in circulation growth. He says power consumption data for August till date shows 14-month high growth on a low base, which should be the theme for the months ahead. So 2 quick calls coming in.